Good morning, friends. Welcome to the ninth episode of State of the Market Live. Today is Thursday and an expiry week, and we have the news that the market has been waiting for. The Federal Reserve raised interest rates by 75 basis points as widely expected, so there is no surprise there. And even after looking at its statement or from the statements of its chairman, there is nothing that the market should worry about. The story remains same, that inflation is going up and they have taken an aggressive stance to control that inflation. However, the markets are all pricing in these things. The only new thing that the market got yesterday was that the first rate cut is going to happen in 2024. Earlier, it was expected to be 2023. Now it is 2024. That means the Federal Reserve is not convinced that inflation will come down any soon. But personally, what I expect is the Federal Reserve is overshooting the interest rate hikes because of its poor understanding of the state of the economy. Because generally, what happens is inflation goes up after crisis. Whether you take war or anything, if there is any crisis in an economy, inflation generally shoots up. Because whenever there is uncertainty, the prices will not find their real place. So they tend to shoot up either upward or downside. Now, what happens is whenever there is a situation like COVID or Russia war, prices generally shoot up, and that's what is happening. So, yes, the Federal Reserve should control interest rates. However, its worry should be more on the jobs rather than just controlling interest rates. So, in this process, most of the central banks are overshooting. That's what I feel. Eventually, they will realize their mistakes and they will start bringing down the rates. Now let's look at what is happening, what is going to happen to our markets, what is going to be the impact today. Let's look at SGX Nifty. So yesterday, SGX Nifty was kind of worried before the Fed event. And once the Fed event came, it went almost to 886. 15,886 and then started coming down. Now the level that we have in mind on the upside is 15,951. So I was looking for a break of 15,951 at least for SGX to break, or for S&P 500 to break at least. Just a minute, guys. So what's happening to S&P 500? We'll see. So S&P 500 is trading around 3814. Yesterday, I put in the channel that we have to break about 3822 for us to look any positivity. This would be my first piece of information. S&P 500 futures or US benchmark futures. So basically, they tried to go there. They tried to go around 3822. You see that here the immediate reaction was to go towards 3822, and then they failed multiple times. Couple of times they failed, and again in the morning today in Asia market they tried to go above 3822, about 10 points above or below, so thereabouts. So again they are not able to kind of find the momentum on the upside. So here, what should we understand? How should we read this kind of particular indications? So basically, if the Federal Reserve's move was totally positive for the market, what would have happened? The market would have shot up about 3822 and it would have gone fairly higher. But now we see that we are not going anywhere there. So that is my first key information. I go into the market today, in our market today, that it is not as much positive. At the same time, S&P 500 has not collapsed. That means it has not gone below the recent lows, which is like, around 3,700 or 3,700 levels. You see that it has not broken those levels. So the market has completely digested the news without any sentiment. The move was only a mere, kind of 100 points in S&P 500 futures. Now let's come back to what our SGX did. In SGX, this is a 10-minute delayed chart, so that's fine. We are just behind 10 minutes. Now you see that after the Fed move came, we just moved by, kind of another 100 or 100 or 150 odd points. That's it. Again, today, what are we doing? What is SGX indicating? It is indicating a subdued sentiment as of now. Subdued sentiment as of a key level, as I told you. So we are at a key juncture here. So we need to break 15,522 remains a key level where we should break. Until then, there is we won't face any situation of crisis. Yeah, this may come next week or some other time. But for today, what are the key points? I need to look at S&P 500 and then SGX, and then today is our expiry. So we'll go back to the daily chart and see what are the possible situations that we can get. See, basically, if you notice carefully, the market has formed continuous inside days. This is a key piece of information you have to carry with you. What do I mean by that? So basically, we need to look at the day high here, 950, and then we need to look at the day low here, which is around 669. So these are the two levels I will be carrying into the market today. The first important levels. That means the first, why I am looking at these two levels? Why are they important? Because we have formed continuous inside days. Yes, in my channel, I have been continuously explaining that we will form a rangy market before the event. So the Fed event is over. So, but today we have expiry. That is also a weekly event for us. So we need to look at the day low and then we need to look at the day high. So this is our zone one. This is our zone one. Zone one. Now, after this, what happens is the market should break at least above 946 or below 15,669. Below 669, I told you that on a weekly time frame, we have, just a minute, guys. We have 15,522 is the level that we have to be careful with. So we'll move it to 522, somewhere around here, 522, and that's going to be my zone 2. Now you might wonder why every day I'm making this zone 1 and zone 2. It is so boring stuff, it doesn't bring me any money. No, it's not like that. This is what brings you money. What brings you money in the market is your discipline, not your indicator. So a person who goes without any indicators with this kind of mindset will at least not lose money. First thing is, he will make decent money, but he will never lose money if he makes zones of himself. Why? Because a better trader is the one who is having a great mindset. First, you need to build your mindset. This is in your hands. No one is going to come and help you to build your mindset. You need to build for yourself. If you cannot do that, no indicator will safeguard you from trading better. So most of the traders, retail traders, fail because they cannot practice something with discipline. You see how every day I am marking zones, remarking the zones. Why? Because every day the way you look at the market changes. Maybe not on a daily time frame, but on an intraday time frame, it will certainly change, and you need to practice that. So first the market, because why I am expecting this as zone 1? Because SGX and S&P 500 futures are indicating to me that the market is going to be calm. Still, I may be surprised in pre-open. That means the next data point I'll wait for is pre-open. Where are the big players expecting the market to open? If the pre-open is somewhere gap down or something, immediately my focus is going to be zone 2. So basically, once I break 15,669, I will look for zone 2. Or if pre-open indicates level below 15,669, I will look for zone 2. Or if our SGX indicates any move below this until the market open, I will look for zone 2. Until then, I will go with zone 1 as the most probable area. And now there is a fairly less chance of a gap up because of the data that we are have looked so far. However, what happens, the market can open somewhere here, immediately it can go and break this level right at the open. So at the open, you can fairly estimate from the market speed whether it is going to break this side or this side, or it can go here and break, come back, or it can go down and come back. So these are all what we call probabilities. So what are we trying to do? We are trying to give a shape to our probabilities. We are giving a shape to our probabilities. So today I'm expecting zone 1 as the area where we will completely trade. But because of expiry, there is a fair chance of going until 522. And we will take support from there. Or there is a fairly less chance of breaking 949 and closing the gap all the way. This is a big one. If you see, this is like 350 points. Yes, Nifty can go 350 points or 500 points or whatever it is, but I'm not worried. I will assess the market as it develops during the day. I do not go with a bias. Number 2. Number 1, preparation. Number 2, you should not go into the market with a bias. People come with bias. Most of the retail traders come with a bias that today market is going to be positive, today market is going to be negative because I think so. Market doesn't care what you think. Market cares only what you think about where it is going when it is going. Okay, so that's on a daily chart. Now let's look at the intraday charts and assess what can we glean from yesterday's trading. Yeah, you see this. So since 3 days, this is a 15-minute chart for 3 days. So for 3 days, I'm not going to go anywhere. So I'm going to remain around these levels. Now let's look at Bank Nifty. Because today weekly expiries are very important for Bank Nifty, we have to always understand what the situation is. So basically, the Federal Reserve news confirms that interest rates are going to rise. So banks will be moved a lot today. Again, in Bank Nifty, the same situation, the boring stuff, but you need to respect that because market will do whatever it wants to do. So our job is to just glean from it. See, simple inside days, that two dojis. That means both buyers and sellers have been fighting here since the past 3 days. So what will change? Today, either the market can change its situation, its location, or it can remain in the same range. So basically, we have to break this range. So I'm expecting somewhere around 30 to 500 levels. So these are the levels we have to look for on the downside. And on the upside, if it wants to trap all the players who have been expecting only negativity, that means if the market is too short, what will happen is it will come down and then shoot up. So our zone 1 is going to be inside. Basically, the rule for inside days is that we need to look for trades above day high or below day high. So this bar becomes very important for today. So this Monday bar becomes very important for today. Either a break of 33,909 or 33,217 is going to bring a lot of traction on the downside. Now on the downside, on a daily chart, how am I going to look for key levels? Let's see that. Because on the upside, we have a gap. So I'm not worried where the market will go on the upside. So on the downside, we will just draw a Fibonacci and then see how it is going to work. So we should take the recent swing high and then see what are the zones it is going to look for on the downside. So basically, I am looking for 32,764 as the most probable zone. 32,764 as the most probable zone. And on the upside, I have one more level which I will take care of, 34,136, and then filling this gap. So anything beyond this, I will not mark unnecessarily because that will only confuse us. So we have marked levels on the downside as well as upside. So I'll go back and see what are the levels. So basically, we need to break 33,217 is one level I need to break, and then 33,757 is the level I need to break. So this is my zone 2. Once I am done with zone 2, the market can come down, and then because on a higher time frame, on a daily time frame, there is a fair possibility that buyers will come and reject the market up. So if there is any large volatility, either the first hypothesis is either it will move within this range or it will come down and go up. Because there is negativity, we can come down and then go up, or if the market decides to go up, we need to break 33,909 first and then 34,136. If at all, because of expiry, it has to fill the gap, it can go until 34,400. So this is our zone 3. Now, this way, when you are going to the market with some plan, with some understanding of the structure of the market, the way you trade also changes. You will not trade everything and everywhere. You are going to plan your trades, you are going to manage your trades well, and that will not happen if you are a trader who focuses only on indicators. Most of the retail traders, they fail because They are slaves to indicators. They want only indicators, and they want flashy indicators. They want indicators, that are flashy. But what traders need to build is a habit first. They need to build a habit first. They need to see whether I have good habits or not. If I do not have good habits, then I need to build them. That is what a trader needs to do all the time. Now, within these, we will see in our indicators what are the levels that I need to see on an intraday basis. So basically, we have in our zone 1, we have a 20-day moving average on a 5-minute chart. So I need to look for break of 15,812 on the upside. On the downside, the levels are open, but on the upside, I need to be very careful. On a daily chart, just a minute, guys. And also here on weekly chart, we need to observe one thing, that there is a kind of minor RSI divergence. You see that we have RSI on the downside here, but here we are not breaking. So there is a kind of RSI divergence, but that will work only on weekly charts, and we need to revisit this chart on Friday to see how it plays out for next week. So let's look at daily. So here, so on the upside, we had 16,812 on intraday chart, and on daily chart, you see that we are all trading below the moving averages. So we need to take support, and our first target on the upside will be 16,049 on a daily chart. Okay, this is the 8-day moving average. So 8-bar moving average rather. So in Nifty, we need to look for 15,812 as the first level to break. 812, remember that. We need to break that, and then only we will go to other levels like 15,830 and then 15,951, and then 16,049 comes into picture. In Bank Nifty, on an intraday, again, you see that we are just below. You see that both in Nifty and Bank Nifty, we are just below the 20-bar moving average. Just below that. So we need to stay above that. Yesterday, I mentioned to you why I mentioned 33,569 to you. This is the reason. And I see that in order flow, people were regularly coming and selling it. So we need to break 33,569 at the least on an intraday time frame, so that I can hit 33,900 first. Simple things work in the market, not complex stuff. You see this? Basically, I need to break this trend line on an intraday. Either I need to open above this and go up, or open below this and then break. Whatever it is, we need to do that. And in Bank Nifty on a daily time frame, so in the gap, we have 34,179, which we already got, and we need to fill this gap. We have, so in this gap, you see that there are two moving averages stuck in, and we may aim for that on the upside. On the downside, we have identified the levels in trading view. So we need to visit them, which is like 32,757 and 33,217. Now let's look at what is Reliance doing. In Reliance, you see that on a daily chart, we are trading above the 200-day moving average. Very simple chart, no complexity. So I will be long in Reliance on a daily time frame only beyond these levels. On an intraday, I will look for like a move of this. Basically, today, if we are negative, if we open negative, we will move between 2,600 and 2,500. That is a decent opportunity, and I always expected this zone to be covered right here. You can see in our free channel that I had expected Reliance to break this, take all the stops here, and then go up or come down. So on an intraday time frame, you see that how we are tucked in just below the moving averages. So any move below 2600, any open or break below 2600 can go all the way to 2500. We need to be careful about Reliance, and if the market has to go down, they have to take Reliance down, because yesterday HDFC and HDFC Bank were pretty positive and they are at key support levels. Let's look at HDFC once, just to assess what they are doing. Yesterday kind of market, just a minute. You see that we are at a key support here, and a break of 2061. Actually today, if the market is negative, we can break HDFC Bank on the downside, but there is kind of decent option support. There is a lot of put writing at 2080. If those put writers give up, we can break below 2080. Otherwise, we can go all the way back to 2140. Again, the same story. You see how boring it is. The market does the same thing. What traders do not observe is glean from that kind of information. You see, a small trend line will give you such a great opportunity. So a break of 2120 can give us a chance until 2140. Let's see what is HDFC Bank future doing. Same story, nothing changes. So all are forming the same pattern. See how many opportunities you have if you have the intention to practice on your own. You practice the same thing that I do with Nifty and Bank Nifty futures, and see today any break above 1320 and sustenance on the upside will give us to 1330, a 10-point trade in HDFC futures also. So that's all for today, guys. Hope you had a great session with me, and trade safely.